Okay, so have you ever wondered if your money is super efficient, if what you're doing, your systems are clear? By the end of this video, I'm going to give you a 3-step framework that is incredibly powerful that's going to help you streamline and then grow the monies that you currently earn. Okay, first step is cash flow exercise. This one is going to be wild. This is a software that you actually plug into your phone. And as you see, these are all income sources from the top. And then these plug into a bucket that we call a reservoir. Now, from that reservoir, we control our living standard. So if you need $20,000 a month to live on, we automate that every month. So some months you don't live on 50, some months 30, some months 10, business is really good, you live on 70. This system puts you into a consistent place to live from. It's not to say you can't go spend more money some months, it's not what I'm saying. But this is an automatic cash flow system. And if you're in sales, if you own your own business, and money comes in sporadically in spurts, this cash flow exercise is going to solve a lot of problems. Step 2, this is the way we position our companies, our assets, everything, and get what's called the private estate going. So everybody's dealing in the public. These are people who hold their LLCs or their rental properties in LLCs, their companies in LLCs, and their personal ownership is over here in the public. Once you shift assets into the private, you unlock tax and asset protection for your family. We see consistently 80 to 90% tax reduction, and then ultimately all assets get out of your name. So if you're ever sued, you can throw up your hands and say, I don't own anything. This is a legacy play. This is where you can spend the money in this system for beneficiaries. Super cool system. This is how you create a run rate. So a run rate is when you build income in these private trusts greater than the income that you personally need to exist. So if we establish on the cash flow exercise over here, hey, we need $15,000 a month to live comfortably with our family. Once these assets on the private side are growing and equal $15,000 a month, technically you are financially free. This system is producing income, and so now you don't need your businesses. Obviously you want them, you want the income, you want the impact, you want the employees, you want to teach your children how to run these companies for a legacy play. Okay, so very cool system, and this is a corporate structure that is your tax plan. If you have a corporate structure and a tax strategy that doesn't address both, you have a butter knife. Or you're gonna work with a CPA who ultimately tells you, buy a bunch of real estate. That's really their only tax hack. Like a full-time orthopedic surgeon working 40 hours, 50 hours a week, putting in knees and hips, wants to go and scrub toilets and manage his Airbnb on his off days, or his wife nonetheless, who's probably raising their kids. So if you have a tax strategist, or probably not even a tax strategist, but some type of accounting professional that's all they're doing is recommending real estate, they only understand a quarter of the tax code. So they're doing what they can, but it's a pain in the butt, and most of all, it's not needed. Last thing, and then let's wrap up here to make this a shorter video. So the third step is what's called the private banking vault. And so most people, you're going to see on this top graph here, the blue lines, they save up and then they buy a car. They save up and pay for their kids' college. They save up and then they pay for a pool. They save up and then they buy an airplane. This is very inefficient use of money, because you can see all the money ends up on a zero baseline. When you use the private banking vault, or what's called infinite banking, which there are some caveats to this, just don't run out and grab somebody and say, hey, I heard I can use whole life insurance to build wealth. You'll probably end up with a horrible product and it won't work. Just telling you up front, so be warned. But when you build these to have a excess portion of the premium go towards the bank or the cash value, it's called overfunded. So imagine, there's 100%. Most agents will give you 100% whole life contract. Well, you actually want about I mean, it's depending on your death benefit. So the more whole life you have in your contract, the bigger the death benefit. The smaller the whole life, the less the death benefit. So for instance, I just built a $100,000 annual premium. I think it was like 110 actually. Of the 110 that the client funds every year, only about 30,000 of that 110 goes towards whole life. The rest of it's all liquid. He can use it, he can borrow it, that money grows tax-free, it's protected against lawsuits. And so he funds 100 every year, and he can do it at 10 grand. I mean, it's scalable. And so as you save and borrow, you actually increase your baseline. And so you can actually grow that money. It's really good for business owners who need to just park cash outside of their company in a safe, stable place to grow. And simply by repositioning your operating expense account over here privately, you can build a multiple six-figure retirement depending on the volume of money that we capture over 15, 20, 30 years. So this is a really cool system. We're going to guarantee death benefit. When you get into old age for long-term care, this will take care of your long-term care. Pay $10,000, $15,000 a month. If you need to go into a nursing home or bring a skilled nurse into your home, this will pay for all of that. And if you get a terminal diagnosis for any reason, with cancer being on the massive rise, you'd get about a $250,000 check if you got a terminal diagnosis. So very cool system. So this initial one is going to affect everyday cash flow. This is where we dial in our personal founder cash flow, go into the corporate structure to reduce and bottom out our taxes as much as possible, and protect our assets with an estate plan so we can live a legacy. And from here, the last piece is with all the money we're saving, let's put it in a very safe place. Remember, this is not an investment. This is a boring place to compound your wealth 4 to 6%. From here, you go into your investments. You go into your rental. You go into a syndication. You go into private or hard money loan. From here, you lend money back to your LLC for operating money or equipment. So very simple system. Don't overthink this. This is what business owners need. Have an amazing day. I'll chat with you guys soon. If you need anything, shoot a message and we'll get you going on this. See you, bye.